Did you know that most people never build real wealth? Not because they don't earn enough, but because they don't invest wisely? The truth is, you don't need to be a financial expert or have millions in the bank to grow your money. You just need to follow a few simple rules that the wealthiest investors use. By the end of this video, you'll know exactly how to build a strong, automated investment strategy that grows your wealth with minimal effort. And here's the best part. You don't need to take huge risks to get there. So let's get started with the first rule. Rule number 1. Pay yourself first. If you wait until the end of the month to invest whatever is left from your paycheck, guess what? There will never be anything left. Most people spend first and save later, but wealthy investors do the opposite. The trick is simple. Automate your investments. Before you pay rent, buy groceries, or spend money on entertainment, set aside a fixed percentage of your income and invest it immediately. Think of it like a bill you must pay, but instead of going to someone else, it's going to your future self. Take Warren Buffett's advice. Do not save what is left after spending, but spend what is left after saving. The easiest way to do this: set up an automatic transfer from your checking account to your investment account right after you get paid. If you never see the money, you won't be tempted to spend it. And the best part? Even small amounts grow significantly over time. If you invest just $10 a day in a simple index fund earning 8% per year, in 30 years you'll have over $450,000. Rule number 2, invest for the long term. Most people want to get rich fast, but the secret to real wealth is patience. The biggest investors don't make money by trading in and out of the market. They let compound interest do the heavy lifting. Let's put it this way. The stock market rewards patience. If you had invested $1,000 in the S&P 500 in 1980 and simply left it alone, it would be worth over $100,000 today. No complicated strategies, no stress, just time and consistency. The problem? Many people panic when markets drop and sell their investments at the worst possible moment. But here's the truth. Market crashes are opportunities, not threats. Every single bear market in history has been followed by a bull market that reached new all-time highs. Those who stayed invested reaped the rewards. So instead of trying to time the market, commit to staying in the game. The longer you stay invested, the more your money will grow. Most people think investing is just about picking the right stocks or finding the next big opportunity. But the truth is, it's not about what you invest in. It's about how you manage your money and your mindset. The biggest mistakes investors make aren't about choosing the wrong companies or missing out on trends. They're about failing to protect their money and letting emotions dictate their decisions. Let's talk about 2 rules that separate those who build lasting wealth from those who panic, lose money, and never reach financial freedom. Rule number 3, diversification is your safety net. There's an old saying, don't put all your eggs in one basket. Yet, every day people make this mistake. They fall in love with a single stock, convinced it's their ticket to riches. They go all in on crypto, hoping to catch the next wave. They invest only in their home country, never looking beyond. And then disaster strikes. The company crashes, the market shifts. Suddenly, everything they worked for is gone. But the best investors don't take those kinds of risks. They spread their money across different assets, ensuring that even if one thing fails, their wealth keeps growing. Think of it like this. If you were building a house, would you use just one type of material? No. You'd use concrete, wood, metal, each playing a role in making it stronger. Investing is the same. Stocks give you long-term growth, as such. Bonds give you stability. Real estate provides income and a hedge against inflation. International markets help you avoid being tied to a single economy. Diversification isn't about avoiding risk. It's about controlling it. It's about making sure that no single mistake, no bad year, no economic downturn can wipe out everything you've built. And the best part? You don't need to be a financial genius to do this. Simple index funds already give you instant diversification. A few smart choices today can protect your wealth for decades. But even with the best investments, there's another enemy you have to conquer: your own emotions. Rule number 4, the market rewards patience but punishes fear. Imagine this. The market crashes overnight. The news is screaming, investors are panicking, and all you can think about is how much money you've lost. Most people do the worst thing possible. They sell. They convince themselves it's better to cut their losses, to wait until things are safe again. But here's the reality. By the time they feel safe, the market has already recovered. They sold low, and they'll buy back high. This is how fortunes are lost. But the wealthiest investors, they stay calm. They know that every single market crash in history has eventually recovered and reached new highs. Every single one. They don't panic. They don't sell in fear. In fact, they do the opposite. They buy more. Because they know that when markets are down, they're actually on sale. Look at any successful long-term investor and you'll see the same pattern. They held on when everyone else ran away. The lesson? Investing isn't just about money, it's about discipline. The moment you let fear or greed take over, you lose control. The people who build real wealth are the ones who stick to their plan, ignore the noise, and trust the process. There's a reason why some people build massive wealth effortlessly, while others struggle their entire lives, despite earning good money. It's not about intelligence, luck, or having the perfect stock picks. It's about consistently making the right moves. And the final rule is the one that accelerates everything. It's the difference between someone who retires with just enough to survive and someone who reaches financial freedom decades earlier. Rule number 5, grow your investments as you grow. Most people start investing with the right mindset, but they make one crucial mistake. They never increase their contributions. They put aside the same amount year after year, even as their income grows, even as they get bonuses, even as their financial situation improves. But the wealthy play a different game. They understand that money should always be in motion, growing and multiplying. That's why every time they earn more, they invest more. Think about this. If you started investing just $200 a month and increased it by 10% each year in 30 years, you wouldn't just have a comfortable nest egg, you'd have millions. It's not just about saving, it's about constantly leveling up your financial future. Every raise, every bonus, every unexpected windfall, it's an opportunity. The difference between those who struggle and those who thrive is what they do with that extra money. Some people spend it on a slightly bigger car, a slightly fancier vacation. Others send it to work for them, where it compounds for years. And that's how real wealth is built. Not overnight, not with risky moves, but with consistent, smart decisions that snowball over time. Investing isn't about chasing the next big thing. It's not about reacting to the market or trying to get rich quick. It's about playing the long game. Imagine looking back 10, 20, 30 years from now and realizing that every small decision you made, every automated investment, every dollar redirected from spending to investing, every time you resisted panic and stayed in the market, brought you to a place where money is no longer a worry. That's the power of these 5 rules. You make investing a priority. Money goes to your future before it goes anywhere else. You stay invested no matter what the market does, because time, not timing, is what builds wealth. You spread your risk so no single loss can take you down. You stay rational and ignore the noise. Fear and greed ruin more portfolios than bad investments. You keep pushing your investments higher, year after year, because what got you here won't get you to the next level. This is how the wealthiest people build their fortunes. Not by luck, not by chance, but by making these simple, repeatable choices over and over again. Most people won't do this. They'll find excuses, they'll get distracted, they'll tell themselves they'll start next year. But the ones who do, they change their financial future forever. If you want to be one of them, start today. Even if it's small, even if it feels slow, because every great fortune begins with a single intentional step. And if you're ready to take control of your financial future, make sure to hit that like button and subscribe so you don't miss out on more content that helps you build wealth. Let me know in the comments which of these rules you're going to start applying today. And if you're serious about taking your investments to the next level, check out this video right here. You won't want to miss it. The sooner you start, the sooner you win.